Hey guys, how's it going? Value Venture Investing here today. So today we're going to be talking about Virgin Galactic, SPCE. Now they just had their Q3 2024 earnings. This was yesterday as we're recording it. Stock was down almost 12% today. And we're going to go through on this video why I think the stock's down. We're going to go over the earnings, what is the update, and what might we see going forward. Of course, from about last recording, we're down a little bit, but stock hasn't moved too much. Still a relatively same valuation. The first thing I'm just going to talk about here was there was quite a bit of talk on this conference call. Well, maybe not specifically on this conference call, but I saw some news articles basically saying that Virgin Galactic was going to be issuing a lot more shares. I saw one that said 300 million shares. I did not hear anything of such. I heard $300 million is what they need to essentially sustain themselves, but we're going to get into that. If you heard anything about that, let me know down below. But I just wanted to say, we got roughly, 28-ish million shares outstanding. So even though we are diluting on this company, we really don't have that many shares that are outstanding. So there is a lot of leeway to go room in terms of that. Not that you guys know that I usually don't like dilution, but it's just something I thought I'd bring up before we got into this video. Cool. So what I usually do here, last 4 quarters plus a year over year comparison, where Q3 2024, probably the top line is what scared investors quite a bit. 402,000 year over year. That's down 77%. They're 1.7 million. And as you can see, last 3 quarters were much higher as well. We know why that is. They've essentially paused flights. Well, they have. The ramp up, we're going to be talking about that. They're not even taking any more ticket sales at this point. So nonetheless, net income was a loss of 74 million. It is down from the last 4 quarters, down 29% year over year. Of course, has to be expected when, of course, there's not a lot going on in terms of actual flights. But we're going to get a little bit more into that, explain a little bit more going forward here. Cash is down as well. It's lowest it's been for a while, $743 million. That's including restricted cash. Year over year, we're down 29%. But we're going to get into this a little bit more too, how much cash they actually need to sustain themselves going forward. So we're going to go into the earnings update here. This quarter, they really didn't have that much information. More in the conference call that I'm going to get to here soon. As always here, they talked about their tool examples here. They've specifically started talking about how they've moved into the build phase. If you remember last quarter, they were talking about how they were going to be getting into that. We're going to be talking more about that very shortly. They also slightly went over here some of the preparations for the test flight for the Delta, and they're working with Calspan for that. Same photo that they actually used last quarter. I believe this was by a drone, but basically saying they're ramping up hiring, and they talked a lot about that. They talked about how this is, I think, they phrase it as the sexy place to work. So hopefully that's the case. It probably is, but it'll be interesting to see going forward how much the company actually grows. I suggest that you guys go to this link here. I'm going to leave in the description. It's not a very long video, but it's just like a little video on tools arriving and the parts fabrication that are ramping up. So I'll leave that in the link below if you guys want to take a look. Now, this was the same slide. If you remember my last video, I'm not going to go into this in depth again because they literally just completely reproduced this, but they're focusing on, and I guess I can kind of see why they're focusing on this, because they were talking about potentially tapping into the equity markets, I assume, or the debt markets, although they weren't very explicit with it, but saying that they're pretty much okay where they're at. But they're talking about the economies of scale, right? Because a lot of these costs that they're building out now are relatively fixed costs. They don't change much from, one mothership here with 2 spaceships, and then 2 motherships with 4 spaceships. They're getting like a 4x in EBITDA, they're saying, and a 2x of revenue, right? But these fixed costs are not really going up that much. But the contribution margin basically for all intents and purposes, the added revenue boost from that goes up significantly, right? So they're basically talking about how they can ramp this by getting economies of scale. And yes, it definitely makes sense in theory. The question is whether they can actually get to it. But now, of course, like I said above here, they are in the build phase, so at least that they made some progress there. But they're saying in order to do this, well, what do we need to actually expand out in terms of spaceships? Well, we're gonna need more motherships, right? So of course, they keep talking about expanding the fleet to another mothership. Here they gave us a little bit more detail on it. So they're saying they've actually, with the expertise that they have, they've moved on to the design phase. Next year, well, technically not next year, but almost next year, the next year after next year, they're going to be building it, testing in 2027, and commercial service in 2028. And that's when they're talking about basically fully utilizing a full spaceport. So that's kind of far in the future. We're going to talk a little bit about that in the conference call, but it was good to get a little bit of more light on that. In terms of the quarter, we've talked about this $400,000 in revenue. It's basically future astronaut fees. That was compared to $1.7 million in the prior year period. And this, of course, this decrease was driven in the pause in commercial space flights to focus their efforts on the production of the Delta class spaceships. So total operating expenses were $82 million as compared to $160 million a year ago. Spaceline operation expenses were $20 million, R&D were $24 million, and SG&A were $34 million. They had a net loss of $75 million. Of course, like we talked about before, compared to the $105 million in the prior year period. Adjusted EBITDA of negative $59 million compared to $87 million the prior year. This is right along where their expectations were. And also this was as well, right kind of in the middle, free cash flow of negative $118 million compared to $105 million in the prior year period. This quarter, they raised $37 million in gross proceeds. So basically dilution of $37 million. I don't know. I saw this one article, like I said, they were saying $300 million. No, $300 million would be essentially doubling the share count that they have right now. So I don't know where that came from. Like I said, comment down below. Maybe way in the future that would be something that happens, but I can't see it for now. So cash, found this kind of interesting here. Like I said, there's $744 million including restricted cash. But usually right over here they have like the last year, but I guess it wouldn't look that good because this went down. This time they're like, yep, this is just what we have. Nothing else. Free cash flow, like I said, Q3 was $118 million and in the red. They guide for next quarter to be around $115 million to $125 million. I'm not going to go through their financials because there wasn't too much interest. I'm going to go through their cash flows, statement of cash flows, just to show you a couple things here. It was good at least to see the stock-based compensation come down. Keep in mind that this is the 9 months ended. This is like not last quarter. This is the 9 months ended September 30th. Sorry, I can't talk tonight. I'm a little tired. So yeah, 24 million versus 35 on the prior year period. Also, the common stock, like I said, the dilution, $108 million in the last 9 months, right, versus 484. So that slowed down a bit, and they've talked a lot about how they feel like they're in a comfortable place in respect to their balance sheet. But we're going to talk a little bit more about that right now. In terms of the conference call, again, like they said last quarter, commercial service is still expected in 2026. And in terms of demand, like they said last quarter, they expect about like 300,000 is their demand, growing at 8%. I wish it was 800%. 8% year over year. That's going to be the question. Is the demand actually there? I know they still have their backlog, but is the demand actually there? So the assembly of their spaceships in Phoenix is expected to commence in Q1 of 2025. So like really close, like really coming up quick here, like we said. The rollout and the testing, so basically going to testing for this is second half of 2025. So that's kind of rolling into the 2026 commercial service that we hope to expect. We're still looking like a year out before we can kind of see that revenue come in. And before they even, I'll jump to the bottom here, before they even open the ticket sales again, they're going to be doing that roughly 1 year before they actually start flying their astronauts. So we'll be able to see a little bit, we'll get a little bit of insight there, but there's going to be a little bit of a gap, right? Expected cost of the spaceships is going to be about 50 to 60 million. We talked about last quarter about their actual payback period that they were expecting. So they also expect that the onset of 2025, they're going to have like a significant increase in cost, but then that's actually going to reduce in the remainder of 2025, and they're looking at like a cash burn of less than 100 million by the end of 2025. Now, this is one that was talked about quite a bit, and like I said, I think there was a little bit of confusion out there that have actually even been seen written online. So they say that they have enough cash on the balance sheet today to get the first two Delta ships into service. So they talked a lot, though. They kept pushing, talking about leveraging their organic growth, like we showed that slide previously, right? And they're leveraging this, of course, like we said, by having another mothership and two more spaceships. And then they expect at that time by 2028, like we were talking about, when the mothership is going to be done, the one that comes after Eve, that they're going to be able to fully utilize the spaceport. And they expect to achieve all this with about $300 million on the balance sheet. So right now we have 700 and some million, right? We're seeing a little bit of dilution, but they're burning through really quickly, right? The cash burn is quite significant, right? But he said over and over again that they expect to have enough organically to be able to get there without significant dilution. They said along the way, as need be, but nothing really significant. But in the language I could read between the lines, they were saying that we want to not just have organic growth from Delta. We want to really leverage ourselves out as much as we can by getting another mothership, then expanding after that into different countries, different spaceports. Man, that's really far in the future. But yeah, I know it's interesting time that we're actually going into the build phase. But as in terms of this quarter, there really wasn't much new, and I guess I can see why the stock's down. It's kind of like, yeah, we really made no revenue, but we're just progressing on what we said last quarter. So I'd love to know what you guys think. Leave a comment down below. Don't forget to like and subscribe. Tell me what you think of the stock. It hasn't been doing much lately, and how do you think it's going to do in the next little bit here off the back of this news? That's going to be it for tonight, you guys. I'll see you in the next one.